Hey everyone, welcome back to the channel, your number one source for income-oriented investing, how to generate passive income from a diversified portfolio of high-yield funds. And in case you missed my recent community post that I did, I needed to take down several Horizon ETF sponsored videos. And I explained the reason why in the community post. It's no fault of Horizons. I would say it's the Canadian regulator, the OSC, is coming down hard, I guess, on fund managers. Their marketing material on any funds that are less than a year old, and other things as well, the way they talk about yield and whatnot. So I had to take the videos down, but I feel that, and again, this is no fault of Horizons, but I feel that because Horizons had such a breakout year this year, 2023, with the launch of many new ETFs, especially for us income investors, right? A lot of new income-oriented ETFs. I just had to refilm a video to at least go through all these ETFs, make sure there's a video for you to check out so you know the ETFs that Horizons now has. So I'm gonna go through them all again here. I'm going to go through all, specifically the income-oriented ones, right? I'm going to leave out the ones that are not income-oriented for now in this video. So we'll go through them. So I'm sure that you understand how they work, what they are, because I do feel like a lot of them are really great additions, and myself included, I've added them in my portfolio. So let's go through these ETFs together once again right now. All right, everybody, we're going to go through all the Horizons income-oriented, or specifically really the covered call ETF ones, right? That's what this channel is mostly all about. So that is what we're going to focus on, and they have a lot of them. We'll go through all of them once again. And by the way, if you just go on Horizons website, you go to our products, active, you'll see the covered call ones here. You'll see the leverage covered call ones here as well. So these are really going to be the one that we're going to be focusing on today. Once again, so let's go through them. You have USCC, which in my opinion, the easiest way to think about this one is the S&P 500 with covered calls. It's not really technically the S&P 500. You'll see that it's the US large cap equity. And if you go to holdings to see what this ETF actually holds, it holds the HULC ETF, which is very equivalent or very close to the S&P 500. I actually looked it up the other day, and it literally has like 500 companies. So yeah, it's pretty much that. The only really small difference I could tell is that it does have a little bit more technology exposure than the S&P 500 index, which typically has, I think, 29%, something like that. This one has 33. So you could pretty much say very close, very similar. I certainly consider it S&P 500 with covered call. So obviously this is a very key ETF to get you the exposure of the entire US market. We all know the S&P 500 is king. I made a recent video where we hear Jordan Belfort talk about that. So management fee for this one, this is the unleveraged one, is only 39 basis points. Very competitive. And I will remind you that the MER, even though it says 0.80 here, it's actually they didn't change it. They're going to change it next year most probably, but this used to be 65 basis points, the management fee. Now it's 39 basis points. So I think that's a reduction. Let me just do it real quick here. 65 minus 39, 26 basis points. So what I'm trying to say is that the MER is not 0.80. It's actually 0.80 minus 26. So with the discount, the MER on this one is currently right now about 0.54. So if you see a management fee of 0.39, you got to make sure you understand that you won't see the discount. You'll probably, on the MER, you'll probably see it the following year. Very important. Another thing I want to point out, even though I discussed this in the other videos that I had to remove, the Horizons covered call strategy, many of their ETFs have been rebranded, renamed in mid-2022. You'll see that here. And also, their covered call strategy has changed to what I feel, in my opinion, is more of a yield-first approach. So their focus is more on income. And they're actually one of the only providers where you could actually see the covered call ratio. If you scroll down and under the product fact, you'll see that right here, product facts. So percent written by month end, 43%. So on this ETF, they're writing up to right now as of end of October 31st, and they typically update it every month. 43% of the portfolio is covered with covered call. So I did speak with Horizons and can confirm that their new covered call policy for all their covered call ETFs, most of them anyway, they could go up to 50% coverage. So very similar to what Hamilton is doing. Now, if they're out at the money, you could see here that they're pretty much 0.15% out of the money, which is basically at the money call. So Obviously, this new covered call strategy reminds me of a lot of what Hamilton is doing with their yield maximizer ETF. So up to 50%, typically very close, slightly out of the money or at the money, but it could be different for each fund, which we will go through. So just a quick word on Horizon's covered call strategy, which is very important. So you have USCC, very important one, guys, because this is kind of like the S&P 500 will get your overall US exposure. USCL, this is basically a leveraged version of USCC. So it will simply hold 125% exposure to USCC. So you'll see that, their branding, basically what they've done is you see the USCC and then USCL for the leverage one. And you'll see that with all the ETFs pretty much. Remember that the leverage ones typically have higher management fees. You see here at 65 basis points instead of 39. And I did confirm with Horizon to tell me at one point, it's really because of the extra management of handling the leverage. So you will get more yield, of course. And as you can see, if the fund is not 1 year old now, they had to remove the yield. So you'll see the yield on USCC, but you're not going to see the yield on USCL. But it's very easy to calculate, everyone. We're just going to have to calculate it ourselves. You take the latest monthly distribution, which is 0.23. You multiply that by 12 to get the annual distribution rate. And if you divide that by the current stock price to get the current yield, 1982, that's the current stock price. And that will give you a number. And then you just do times 100. So the yield on USCL as of stock price of 1982 based on the latest distribution is just under 14% yield. So of course, with the leveraged versions, guys, you'll get about maybe not 25% more yield, but approximately that much more yield, right? So because the leverage, you just have more exposure. So moving on, that's USCC, very key ETF. This is probably, I have a lot of exposure in my portfolio to this one. I think the S&P 500 is king. It's a very good way to get your overall US exposure. QQCC is the NASDAQ 100. So same cover call strategy, it's just on the NASDAQ 100 index, so it's going to be a little bit more technology focused. Management fee is 65 basis points, however, not 39 basis points like USCC. So again, you scroll down, you could see that pretty much they're covering very close to up to 50% when it comes to covered calls. And then QQCL, which is actually very, very new, is just a leveraged version of QQCC. So again, you look in the holdings, you'll just see QQCC at 125%. So again, you'll have to calculate the yield yourself, but you're looking at about 20 to 25% more than this yield here. So very, very nice yield, obviously. Moving on, CNCC. Now we're going to the Canadian exposure. So I really like Horizons for really doing them index based, right? You kind of had the S&P 500 here, the NASDAQ. Now you have CNCC, which will take care of your overall Canadian exposure. And all it is, guys, it's the TSX 60. So the TSX 60 is kind of like the S&P 500 for Canada, top 60 companies, very diversified to get your overall Canadian exposure. So they simply do covered calls on the TSX 60 index. So over 10% yield right now as of November 27th. And of course, they're going to have a leveraged version once again, which, as you probably guessed, is CNCL. So a bit more yield, but of course, if you have 25% leverage, you're going to expect 25% more volatility, which is completely fine if you're buying and holding and you're a long-term investor. So these 3 or 6, leverage versions as well is really going to be your overall, US and Canadian exposure using indexes. I love index investing. Moving on now to more sector-specific stuff, you have BKCC, which will cover the Canadian 6 banks, not the Canadian financial. It just has the banks. Very, very high yield here because there's been some downward pressure on the Canadian banks. So, the more downward pressure there is, the more the yield goes higher. As we all know, if you look at the holdings, you'll see the Horizons Equal Weight Bank Index ETFs, which is the 6 banks. And you'll see the 6 banks as well individually, most probably so they could actually write the covered calls on them, right? So very nice management fee as well. So the USCC one, there's some that have a discount here. And it's really low, very competitive management fee. It's going to be USCC, it's going to be CNCC, and also BKCC as well. So 6 banks with covered calls, very high yield. And of course, you have the leverage version, once again, BKCL. And this is the one that I personally own myself. This has incredibly high yield. We're talking in the 15-16% range now. So it's a great time to get into this one, to be honest with you. Moving on, you have the energy one. So this is the Canadian energy, it's specifically the top 10 Canadian energy companies. What I really like about ENCC, not only does it have really high yield, but they don't even have to write that much covered calls because you'll see that the coverage is only 26%, 27%. And that's because these are more volatile stocks. So to get that high yield, you don't need to write as much covered calls on it. You also see that they're actually slightly more out of the money, 2.69% out of the money. So, and by the way, these are, yes, they're more volatile, these stocks, because they go up and down with oil prices, but only 6 out of the 10 of them are oil and gas producers. You have Cenovus, you have Suncor, Tourmaline, Canadian Natural. Of course, Suncor, Canadian Natural are the 2 biggest oil and gas producers. You have Imperial, ARC, but there's 40% or 4 of the 10 stocks, TRP, Enbridge, Keyera, and Pembina are pipeline companies, which are not as volatile as the oil and gas producers. So this is why I really like this ETF here. And of course, you're going to have the leverage version, which is like over 17% yield, ENCL. And this is the one I own myself as well. I recently swapped my ENCC for ENCL. So very, very high yield of these really big and powerful Canadian oil and gas companies. Pretty cool. Moving on, you got the gold one. You have GLCC, which is gold producers. Gold has been going up as of the days I'm filming this. As you know, when there's, gold goes up when there's more instability out there. So if you look at the holdings, you will only find the big blue chip gold producers. You'll recognize a lot of the names here, of course, Newmont and Barrick and Goldfields, etc., B2B, B2 Gold, etc., etc. So only the big boys, gold producers. Unfortunately, there is no GLCL yet. There is no leverage version of this one. I'm hoping they do come out with it soon. I'm assuming they will because they did it for the other ones. And by the way, this is actually their biggest and most popular one with the highest amount of net assets. So why not create a leverage one? If they do, I would certainly maybe be interested in investing in it. Moving on, so there's HGY. So this is physical gold, unlike GLCC, which is the gold producers. This is literally physical gold. You'll see that it basically holds GLDM, which is, I believe, the biggest physical gold spot ETF. And this, by the way, is the only ETF where they do covered calls on only up to 33%. Not 50%, so a little bit less covered calls on there, which would mean, and because it's such a not a volatile asset, physical gold, you're not going to get that much yield. But hey, 6% while holding physical gold ETF, not too bad. And you're only giving up a third of the upside if gold goes up, because they're only writing up to 33%. So these are really the key covered call ETFs that are either index based or sector based from Horizons. I really like what they've done. I love the fact that you have, the non-leverage version, and then you have the leverage version, which just holds 125% exposure to the non-leveraged ETF here. Obviously, I'm gonna always, me personally, go with the leverage one because I want more yield and I don't mind more volatility. So moving on to what I feel is a game changer ETF, and I, did a recent video on talking about EQCL and even HEQL. You can check out that video. It's a recent video that will have come out before this one. But EQCL is the first of its kind because it's really basically HEQT, which is similar to XEQT and VEQT and ZEQT, which is an all-in-one equity solution, which combines some of the best index funds to give you the best stock exposures all over the world. So it's not just sector diversified, it's also region diversified. So you see here that they have basically the USCC is in there, CNCC is in there, QQCC is in there, 3 of their index-based covered call ETFs, right? That will give you exposure to US and Canada. But they also have the HXDM, which is developed markets outside of North America, so things like Europe and Japan and Australia, and they also have a little bit in emerging markets. So these ones are not covered call, however, they are this one here and this one here, they're growth ETFs, but the majority of the portfolio, if you add up 12 plus 25 plus 43, it's like 80% out of 125 that is covered call. So this is leverage as well. That's why you see the enhanced, and that's why if you add up the percentages, you'll get 125. Not 100, and this is about 11% yield. So this could be a one-stop shop. If people ask me all the time, look, what if I only want one ETF and I'm an income investor and just get everything all around the world, sector and region diversification? Now we have that option. So this is kind of like the income version of HEQT, right? So very, very game changing. And I won't go into too much detail now, but I did have a recent video on this one as well. And they kind of do have an unleveraged version. If for some reason you like this concept, but you don't want the leverage, you could go with GRCC. This is 80% equity, 20% fixed income, but there's no leverage. You'll get about 8% yield, I believe. If you go on the holdings, you'll see a lot of the same holdings, except you will see 20% in fixed income, which is this one here and this ETF here. So this is kind of, you could say, like an unleveraged version of EQCL. Now they've also released 3 covered call ETFs on US government bonds. So a lot of these ETFs have come out in the Canadian market. You have 6 of them. I actually made a video where it compares all of them, including these 3, but I just figure I should mention it. So you have LPAY, which is long duration US bonds with covered calls, 45 basis point management fee, and they write up to 40% with the covered calls. You're looking at about 10% yield with this one. Then you have an MPAY, which is medium term, which if you go to holdings, you know, the combination of ETFs, you'll see the average is going to be a medium term. For that one, this is about 8-9% yield. And then you have the short one, which is, as you probably guessed it, SPAY, which is going to have the lowest yield but the lowest volatility. So LPAY is very similar to the H bond ETF that Hamilton ETFs came out with. It focuses on long term. It has about the same yield. But really what Horizon did that's special is come out with the medium term and short term one, which are the unique ones. So these could actually be very good, especially like the MPAY. I find it's perfectly balanced. I find this could be a really cool alternative to park cash short term. Will it stay completely stable? No, it could go up and down, but it's definitely going to be less volatile than the long-term duration one, because the shorter the duration, the less volatility. So check out that video if you want to learn more, where I actually compare all 6 of these ETFs. So that's it, guys. I just wanted to re-upload a video and go through these amazing, a lot of them new Horizons ETFs, which I own a lot myself. I mean, I own USCL myself. I own BKCL for my bank's exposure with leverage, cover calls and leverage, and I also own ENCL as well. Will I get QQCL? I'm not sure. Remember that pretty much whatever's in the NASDAQ 100 is kind of already in the S&P 500, but I could see myself pretty much getting it. It does have a little bit more yield, by the way, than USCL. So I hope this video was informative for you. Again, I apologize to take the videos down, but I figured that because Horizons had such amazing launches this year, I had to just refilm them to make sure you understand what these ETFs are all about, how they work, leverage versus non-leverage ones. So make sure to go on their website, do your research, check them out. A lot of great options now for income oriented investors like ourselves. So see you next time, everyone. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the Ultimate DIY Investing Package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once, because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and PASSIV referral links below. So Questrade is the broker that I personally use, and PASSIV is the broker companion tool or companion or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And Passive, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of Passive is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram where you could follow us or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.